This year's been very, very strong. The Japanese market's up 25% in yen terms. That compares to the US market, which is up around 13%, and Europe, which is up around 9%. The reason for that strength is that the consumer's been pretty resilient, and corporates have been able to increase their prices, which has defended their margins. Now, that's meant sort of better earnings than people were expecting sort of 9 months ago. So the market's been pretty strong. One of the key reasons for the additional buying that we've seen this year has come from foreign investors. So international investors have started buying into the Japanese investment case for the long term, and that's meant that the market has re-rated. The longer term story still remains intact in our view. So although the market's been strong, I think over the coming years, there's a structural case to still own Japanese equities. That's predicated on 3 areas. Firstly, better corporate governance. So there's been a lot of reforms since Shinzo Abe came to power in 2013, and we're only halfway through that journey. So I do expect to see better profitability and a focus on profitability going forward. The second is a move out of that deflationary environment more to one that is inflationary in Japan. Not saying it's definitely going to happen, but we've probably got the best chance in a generation to move to a more virtuous circle for growth. And the third area is CapEx. So friendshoring, reshoring, and the green transition are all positive for sort of the inflationary and growth environment going forward. So the investment case for Japanese equities still remains solid. Although we've had a strong year, I think over coming years, investors are still going to continue to buy into that. We're bottom-up stock investors, so we're not experts in the macro space. Our expectation, though, is that monetary policy will normalize over the coming sort of 12, 24 months. Putting an exact time on that is very, very difficult. I would expect the Bank of Japan to potentially initially change the wording around their guidance, and they might do that in the October meeting or the December meeting. And then after that, they might make some more meaningful changes to yield curve control and to the negative interest rate policy, which has been in place for a number of years. Those measures really were abnormal monetary policy for abnormal times. So just to reiterate, we expect a degree of normalization, but it's difficult to put an exact time on it. If we do see tighter monetary policy, you'll probably see a stronger yen on the back of that. And that is positive for domestic names and domestic stocks and importers in Japan.